8 straight weeks of losses. How much patience do options traders need? Why can't Bitcoin break 60,000 despite the heavy negativity? And as usual, we'll break down our options strategy for the week. Hi everyone, you're on the Opconomic channel and I'm Roman Veselovsky. Today, as always, we'll find ways to profit with Bitcoin options. Let's start by reviewing the previous trade. Let me remind you that last week I bought a corridor from 68,000 to 58,000 on Bitcoin and it cost me $110. In my opinion, that was a very reasonable price because if we take the total of $110 and divide it by 64,000, we get only 0.17%. That is, considering that for Bitcoin, a move of 10 to 11% is, generally speaking, normal. With such a move, such an option can increase, or rather, such a position can increase by at least 10 to 15 times, if not more. And that's why I believe that opening such positions is fairly safe. Last week, my risk was still, it turns out, just under 1%. And now, at this particular moment, I am finally moving forward with everything. This whole process started, roughly speaking, around the 7th, and to be more specific, that was back on June 7th. Now, as we look at the calendar today, it is already July 24th. So, for a period of almost 8 consecutive weeks in a row, I have been consistently taking losses on my trades, and if you take a look at the profit chart right here, you can see that it looks exactly like this. And it turns out that the previous consecutive losing streak lasted all the way from January 30th to May 26th. So in fact, that is almost a full 5-month period. And now, looking at the current situation so far, we are only just entering the 2nd month. But for now, in my opinion, the situation is much less critical because back then I had already started increasing my risks. Right now, I'm proceeding very cautiously. And in my personal opinion, the current prices are already at the level they were at the end of that equity drawdown, when I was increasing my risks to about 1.5 to 2 percentage points. And in my view, it's also possible to start doing that gradually now. And a bit later, I'll explain why. So let's move on to our usual agenda. So first, we'll make a forecast for Bitcoin for the week. Then we'll select an option strategy, and then we'll choose a risk level to determine how much is reasonable to invest in this position at the current moment. All right, let's get started. First of all, let's choose the next expiration date. So our next expiration date is going to be July 31st. All right, now that we have successfully selected it, let's take a moment to switch our view over to the 4-hour chart, where you will see that the expiration is scheduled to occur at this exact point on the timeline. So this empty white space here is the specific region that is currently available for the position I'm going to initiate with these options. All right, moving on. What do I see at the moment? I see that the 60,000 level is holding strong against the bears. That is, as I've mentioned more than once in previous videos, the 60,000 options level is very strong. And now we can see that negativity is coming in. In other words, the situation in the Middle East is heating up. Basically, if we look at it from the specific perspective of the Federal Reserve's current monetary policy, nothing particularly great or encouraging is happening at the moment either. And it turns out that despite all of this uncertainty, Bitcoin, ever since June 4th, when it first entered this consolidation zone around 64 to 60,000, has stayed right there. Interestingly, this same price zone was highly relevant during the previous market drop, that is back in the month of February. And I think this is a very positive sign because it is one thing to look at 2025 when there was plenty of positive news, and yet despite that, Bitcoin failed to show any growth. But now the situation is the opposite. That is, the time has finally come when there is actually bad news coming out. So starting from about mid or early June up to now, there has been a lot of bad news, but at the same time, Bitcoin is holding steady. And what does this tell us? That is, in the market, it's always more important to watch the market's behavior than the news. Why? Because first and foremost, it's the sellers and buyers who move the price. And if a buyer is buying despite bad news, it means they see something good for themselves. And that's why I see the current situation as a positive for the bulls. And that's why I believe that Bitcoin could very well, at some point when this supply that arises as a result of bad news is absorbed, meaning people are afraid, they sell, they exit cryptocurrency, but someone else is picking it up. And at the moment when this supply is absorbed, which in my opinion has already been going on for about 7 weeks, and that's quite enough, I think that in the next 2, 3, or 4 weeks, a strong breakout to the upside could happen, and Bitcoin could easily rise, I believe, by at least 10%. And that's why I believe that the target for the move, if it happens, is somewhere around 7,400. That's it. And probably you can even use technical analysis as a guide, meaning we could go somewhere near the previous level. That was 72,500 or right around 73,000. And when I eventually choose options for growth, I will be focusing specifically on this particular level. So most likely I will choose options just above 68,000. Maybe I'll take the 69th, but for now I'm aiming for 68. And just in case, since put options have already become cheaper, I would really like to have some kind of extra insurance in case I turn out to be wrong. And for example, the Middle East situation escalates seriously, meaning things get worse and panic breaks out. Then I will take some far out of the money options, maybe the 57s or maybe the 58s. That is, I would like to protect myself just in case against a serious move downward. So it turns out that I continue to count on the possibility of a volatility breakout. I am more expecting a breakout to the upside, believing that the probability is higher for an upward move, but just in case, I will insure myself with some put options against a downward move. So this is the comprehensive strategy that we will be carefully implementing throughout the course of this week. And now let's move right on to the process of selecting the specific options available to us. It actually turns out that if we take a much closer look at exactly what happened during last week's session, we can clearly see that, well, okay, let's dive into those details now. It's clear that the last 4 weeks have been incredibly low in volatility. That is to say, please take note of the fact that even at the extremes, that is the maximum and the minimum, the market did not even manage to move 4%. That is really a very small amount, because if we look at the average movement for Bitcoin, for example, and take into account its entire trading history, you can see that, hold on a second, okay? The average movement, we need to take the absolute value. Oh, the average movement is 5.8%. That's up to the close. So even if we just look at the average movement since the beginning of 2026, you can see that on average, Bitcoin moves 3.9% up to the close. But here it did not even move 4% to the maximum or minimum. That is, if we look, for example, at the same kind of movement to the extreme point, then since the beginning of 2026, this average movement amounts to 6.7%. So you could say that these weeks are very narrow, and I usually pay very close attention to volatility contraction, because after such periods, there are often strong moves. Let me remind you again that we are still in a record streak, without Bitcoin moving 12% from open to high. It's already been 65 weeks. And as I have repeatedly stated, when there hasn't been a strong upward move for such a long time, the options traders who, for example, sell call options are practically unafraid, because over the course of a year, a fairly strong confidence forms that Bitcoin won't rise significantly anymore. They've gotten used to making money this way, so if a significant upward move suddenly happens, it will come as a surprise, and at some point they'll have to adjust their positions. Some will get stopped out, and some will be liquidated. That is exactly why I firmly believe that a significant upward price movement could potentially trigger a very strong wave of liquidations and closures of short positions. So I think that this current streak will end sooner or later, and the number 65 is already a more than sufficient number to expect a strong move like that. So that is regarding the weekly streaks. Now we will take all the data for the backtest as we usually do and forward it directly to our automated backtester for further analysis. Right away. So what exactly can we see when we examine this data? Now let's take a much closer look at which specific options are going to be the most profitable for us in the long run. Once again, I really want to point out that if we carefully look at the green triangles compared to the red ones, it becomes perfectly clear that right now, at this very moment, it is almost entirely impossible to find anything truly profitable to sell among the red ones. By the way, the only suggestion is to sell in the money put options. But again, this is primarily because for most of the period I'm analyzing, Bitcoin was rising. So it's simply saying that if we basically consider it, a deep in the money put option is almost like buying the underlying asset itself. So for example, if we take a closer look at the chart, we'll see that this chart is roughly similar to what it would look like if we were just trading Bitcoin directly. And for instance, if we take, say, the 74th put, you can see that all these charts here look pretty similar. So it actually turns out that here, the profit does not simply come from earning the premium, but rather from the specific fact that the backtest period we have was characterized by a consistently strong upward trend. That's why he says that selling such options would have been profitable. At the same time, notice how favorably it depicts buying. For example, the system suggests that you consider buying the 57th put option, which is roughly equivalent to a decrease of less than a 12% market drop. In other words, it shows a pretty good backtest performance, which has been performing well and even reached a significant new high over the past year. So for example, if we take some 48th put option, which costs $5, you can clearly see right here that there was only one profitable trade, which is the reason why it shows a profit. But at the same time, the idea of purchasing an asset that hasn't shown any good results since 2020, well, it is simply not something I would ever consider doing. And actually, even if such a move happens right now, even the 57th options, which currently cost $35, I think should also demonstrate a very strong and impressive performance. Although for me, these types of market fluctuations are always a clear reminder that you really shouldn't leave your risks uncovered. That is, at any moment, something unexpected can happen. Just like COVID was unexpected, I also understand that we can expect surprises from the Middle East. In other words, we never know when it might flare up. Of course, it would be better if it didn't flare up, but if it does happen, the situation could develop very rapidly, just like it did with COVID. No one expected this movement, but it happened nonetheless. So in principle, it's even interesting. Let's take a look at how much the percentage drop was there. So it turns out it was, well, yes, if you take a look back, you will see that in just 5 days in March of 2020, the market dropped by 35% for Bitcoin. And you could certainly say that, of course, the cryptocurrency market was still young back then and liquidity wasn't that great. But at the same time, the S&P 500 index, the main American index, was also falling sharply, as far as I can remember. It was almost a record-breaking drop in terms of its sheer speed, arguably the fastest downward move we have seen in nearly 50 to 60 years. So it is possible that something like that could happen again at any moment. In other words, don't think that the markets are becoming wiser or smarter and so on. In reality, black swan events occur with surprising regularity. That being said, I still do not want to purchase options that only provide me with a tiny 0.29% chance of turning a profit. In other words, I don't have the patience yet to wait for 5 years, so I'll pick something closer. So the 57 put options, for example, look a bit more interesting. And as I already mentioned, since I believe that for now the probability of growth is higher, if I turn out to be wrong and the market really crashes, then honestly, whether it's the 58, 57, or even 56 options, it won't make much difference. That is, if panic starts, I think the market could even drop to 48. So if you were to estimate for the market to reach 48, that is to say $48,000, it would actually need to drop by about, 16,000 or so in total. 16,000 is about 25%. So in my opinion, that's quite realistic in the event of panic. That's why I won't be taking puts that are too close, basically, although the 58s and 57s only differ in price by $10. So the 57s cost 40 and the 58s cost 50. So I'll probably stick with the 58s after all. Yeah, and I'm quite satisfied with the chart. Adding it to the portfolio. Oh, by the way, I've already added it, yeah. And now call options. So I have a bit of a dilemma with the call options. That is, growth usually doesn't happen as quickly as a decline, because even if people are euphoric, often growth requires money. That's why it's always harder to push markets up than it is for markets to fall. And that's why when we buy call options, of course, you can take ones that are too far out. So for example, they recommend the 71st, but you can see that the 71st is from March 2024. So if we were to take such far out options, well, there aren't really any highly profitable trades here. This trade here too probably wasn't that expected, because then it turns out that from January, February, from March 2023 to, for a whole year, there also weren't any strong trades. And as you can see, it happened completely unexpectedly. By the way, even here on the chart, you can see, look, that, for example, this trade was unexpected. That is, from 2021 to 2023, nothing happened. Then suddenly, quite unbelievably, the market grew very strongly in 2023. And here you can see that according to this chart as well, the current growth seems incredible. So it seems like the market is no longer capable of strong growth. Therefore, the 71s, in my opinion, are a bit too far because they're priced at 35. All right, let's take a look at the 69s. The 70s are priced at 50, the 69s at 80. But the 68s, you see, they already jumped quite a lot. So there, the difference is almost twofold. They're priced at 140. On the one hand, you want something more reliable, but on the other hand, you want something more profitable. That is, if a black swan event happens. And actually, this is quite an interesting point. I guess I'll go with the 68s after all, since I've already been waiting for 2 months, so I'll stick with the 68s. Although today I spent quite a while thinking about this decision. So it turns out that my position for the week is this kind of strangle. In this scenario, the potential loss is $340. If the market moves by the 12% move that I'm expecting, that will be about $72,000 in total value, which effectively means $6,000 in profit with a $340 cost. So the potential is roughly 1 to 18. All right, that's settled. Now I need to figure out the risks. So on the one hand, since I remember those 4 months that I waited, as I mentioned in previous videos, from February to May, right now, of course, I don't want to give up all the profit right away, but at the same time, I think the volatility is favorable, and I wouldn't want to miss the move here. So let's see what happens if we take 5 options each and check what that looks like financially. If we decide to take 5 options for each of us, that actually totals up to 1,096. 1,096. All right. Now let's consider what would happen if we were to take 4, or maybe even 4.5. Approximately 4.5 minutes. Well, that would put us right at 1,000. To be completely honest with you, I am actually thinking that I might want to go ahead and purchase, let's say, 4 options at this moment, which would represent a total risk of just slightly under 1%. And then tomorrow, if nothing happens on Sunday, buy the rest. But since I know that there are often strong, unpredictable market moves from Sunday to Monday, maybe it's just not worth trying to save. So I'll do it properly and buy 5 options after all, even if that means the risk will be a bit higher. So 5 options. It turns out the equity has now dropped to 127. And let's take a look at what we have with the backtest. The backtest shows that, in fact, with the current prices, the drawdowns are actually insignificant. So if we look closely right here, starting from the year 1064, there was virtually no significant drawdown at all. Yes, as you can see, with these specific option prices, any even slightly active movement easily pulls the equity chart back up to its previous highs. Therefore, in principle, you can see that the maximum drawdown was 31. The interval, here it says days, but in reality, it's just 31 intervals. Since our intervals are weekly, it turns out that the maximum wait could have been 31 weeks until a new equity high. 31 weeks is quite a lot. So that's about 6.5 to 7 months. But here, the movement up to the closing is taken into account. That is, if the market, for example, suddenly shoots up or drops sharply and there is an opportunity to close my options with some profit at that moment, I plan to partially lock it in. And more often than not, a strangle still implies active management if the market moves beyond its boundaries. That's why I think things won't be quite as dire as they look here on this chart. But if a strong move does happen, you can also see some very encouraging numbers here. With a risk of 0.86, the best trade brought in 63%. So it turns out the record was 65 times. That's why just one such trade makes up for, well, more than a year of waiting. The most important thing is to wait. And the most important thing is not to lose half your deposit while waiting for this trade. Well, friends, I guess I'll go into next week with this kind of trade. As for other data, such as open interest and data on liquidations and levels, right now there's no point in looking at them because practically nothing has changed. So right now it's July, volumes are quite low, meaning almost nothing is happening, and that's why we'll only analyze open interest when there are significant changes happening there. So we've chosen the position for the week and set the risk. And now, see you next Sunday. Thank you, friends, for watching this video to the end. Let me remind you once again that this video is not an individual investment recommendation. All trades you make are at your own risk. And as usual, I recommend not increasing the risk in any single trade above, say, 3 to 3.5%. And I guess that's all for now. See you next Sunday. This was Roman Bezadovsky with you. Bye.